Global equities continue to navigate heightened volatility as the US Europe tariff tensions unsettle risk sentiment. Currency weakness adds pressure, and the domestic earnings deliver a mixed picture. To help us understand what this means for the Indian equities in the month of February, we have with us Mr. Devendra Singhal, Equity Fund Manager at Kotak Mahindra Asset Management Company Limited. Welcome once again to the show, Mr. Singhal.
Thank you, Asta.
So, with the high FPI outflows already in January, do you expect stabilization post-budget or more sellings if tariffs and geopolitics flare up again?
Asta, I don't think budget could itself be an event whereby flows could halt unless and until the government does something on the taxation side for the FIIs or FPIs. I think there could be some breather. But I think the way the flows are being happening is that they're flowing to the emerging markets, of which India is a small part. So while we are getting the indirect flows through the passive flows coming in, there has been an active selling by the FIIs in the Indian market, which is continuing even in the month of January as we saw, right? So it would be difficult to see them, stopping unless and until there's some, really big tax relief for the FIIs, or the government really, gives up a path that would basically boost FIIs, that the earnings growth would be back in the system.
Yeah, it would require some extra efforts from the government side for sure.
I think so.
Yeah, okay. So, which market caps investors should prefer now? And how should mid caps and small caps be approached?
Asta, we have been very categorical that, that today the risk reward is in favor of being in more large caps and mid caps. Large caps are more reasonably valued. Mid caps, though being valued at a premium to the historic valuations, the earning growth has also been pretty sharp with them, right? Now, small cap has been one space where the valuations are very at significant premium to the historic valuations, and the earning growth is also a bit patchy. But, we have seen that over a long period of time, you have these market cap, converging to a similar returns therein. We have seen a pretty sharp correction in small caps and mid caps over the last 1.5 years. And if anybody who's underexposed to small caps and mid caps and has a 5-year plus horizon, they should also have a neutral weight in small caps and not be, it's not that they can't invest in small caps at this point in time, but you just need to be, have a longer term view. But if you're really looking at a near term, it's large and mid caps which likely to be in favor.
So please tell us, after the underperformance in 2025 and currency jitters now, which sectors are in lead in the first half of 2026? Financials, materials, consumer discretionary?
So, see, we have seen financials coming out with really good results, and most of the NBFCs, banks have delivered numbers in line with or exceeding the expectations of the market. And we do see things being better for the financials as we move forward into the year. Materials on one side, especially, the ferrous commodities or the non-ferrous commodities have actually done pretty well over the last couple of months. And with dollar, weakening, there could be a tendency of all the other commodities also participating. So we do expect materials to do some bit better in terms of the coming 6 months or so. Discretionary, we have been bullish and they have actually performed in line with the expectations. It's the recent jitters around taxation hikes, which is leading to some bit of, nervousness around that. But I think that is also one segment which should do well over the coming quarters.
So please tell us, are equity valuations still supported by earnings visibility, or are we entering a phase where growth expectations are too optimistic compared to macro headwinds?
Okay, see, it has always been the case that you expect some earnings to be coming in, and historically you've seen that it has generally been on a disappointing side. This year, though, at the start of the year we were looking at a mid-teens number on the Nifty. I think with some bit of luck we should be able to get it, but we would require some bit of luck. But I don't see there could be serious downgrade into those earnings as we move into the next year. So yes, expectations are a bit on a higher side, but I think it is not something which is something out of magic which would happen. The companies can still deliver with some bit of things like the EU trade agreement which we have happened just now, concluded just now. If we get the US trade agreement also getting done, we start seeing the capex again picking up, first by the government and then on the private side. I don't think the numbers are, something really fancy which cannot be achieved.
So, Mr. Singhal, please tell us, which sectors should investors look for now, especially if the conditions get worse globally?
Okay, see, when we look at things getting worse on the global side, it is always the domestic facing sectors which tend to do better. Now, this would be, largely financials, consumer discretionary or consumer staples. And then you have, segments like power, which are all in-house dependent on the consumer country, Indian consumption overall. So all these sectors like automobiles, these would tend to do better than the others in our view.
So, are the valuations too high right now, or the long term story is still strong?
See, when we look at valuations and we look at the long-term averages, yes, we are on a slightly higher side. Large caps, the premium is just around 10% to the long-term averages. Mid caps is a slightly better, higher number, but it's the small cap which is, on a really higher side. But if we look at the growth rates the country has delivered over the long period of time, I think if somebody has a view of 3 and 5 years out, then the valuations are pretty reasonable. We are the fastest growing economy in the world. We would be one of the largest contributors to the overall GDP growth in the world. And for that, you need to pay a premium.
Thank you so much, Mr. Singhal, for joining us and sharing your valuable insights on the Indian equities in the month of February.
Thank you.
So, we hope this discussion helps our investors navigate February with more clarity and confidence. For more such conversations, stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.